Good evening, everyone. Welcome to Altcoin Mentors YouTube channel. My name is Peter, and today I'm going to be doing a daily update on Bitcoin and also a short little technical analysis lesson on volume and why it's so important. So today, earlier this morning at about 9 a.m., Bitcoin ran up. As you can see, it's just one big candle to the upside, and then it kind of stayed at this little narrow range for a long time. And then, just recently, it dropped. So over a few hours ago, I sent out a tweet with a picture of daily volume on Bitcoin, USD, just to show you why volume matters. So I'm going to show you the updated picture and then show you why it matters. So here's the picture. So this is March 16th. This is from Crypto Compare. I don't know if you go to the website, but it's a good website to go if you want to check out the volume. So March 16th, so here it is, 9 o'clock. See this big bar that goes up, lots of volume, because now people are FOMO. People are trying to chase it to the upside. And then volume dies. And then it just channels. You see a couple of blips, but basically it's pretty much dead. There's no volume throughout the whole morning and afternoon. And then at nighttime, bam, volume comes back in, but to the negative side. And so that's what happens when there's no volume. And the reason why I bring this up is because this is a snapshot of one day, right? So what really matters is if you look at the 1 month. So this is where we are, right here. Look. There's no volume. So you look at the days here on the 16th, look how low that volume is, right? So where's all the volume? And then if you look at it from just like in the last 1 month, you look at it around like 20,000, 30,000, 40,000 coins. I can't look over for 6 months, but what I'm saying is overall the volume is very, very light. And until new money comes into the market and really makes a big push to the upside, it's going to be channeling for a very, very long time. And that's why what we have to do as traders is we have to see the charts for what they are. Because there's an adage in trading, right? Even just in life in general, is that most people see what they want to see, not what is actually there. That's what happens with a lot of traders when they look at charts. Because what happens is that if you're really a gung-ho Bitcoin person and you really want Bitcoin to go up, you're going to be trying to look for the waves up all the time, trying to be going for it. But what we have to do as traders who want to make money consistently for a long period of time is that we have to see the charts for what they are. So you look for support, you look for resistance, you see where things can go. So I want to focus in on the yellow lines here. The yellow line is 8,600. And the bottom line here is 7,900. The reason why that's important is that a couple of days ago, I tweeted out those numbers. So here's our Twitter account. And so yesterday on March 15th, I tweeted out. I said that Bitcoin touched 7,700 overnight, 8,384 range is resistance area with intraday resistance at 8,600. If it breaks 80.50, Bitcoin's in trouble. It broke 80.50, but not too much, and then it started going back down. And then later on in the afternoon, I tweeted it again, that BTC was within the resistance zone of 83 to 8,400, has to break above 8,600 to go back up to 9,400. So how did I know that was 8,600? Because I look at the charts in a very, very objective way, right? Not in a, with like, beer goggles or with love goggles or with rainbow goggles or fairy goggles, right? I try to see the charts for what they are. So I look for support, I look for resistance, where prices can go, and I saw 8,600 to the upside. Just like I saw 78.80 to the downside. It hit 7,900. So I'll show you that tweet. Goes a little bit higher, goes a little bit higher, and then you see it here. Bitcoin intraday wave trend turns negative. Daily Bitcoin VIX also higher. 80.50 IT support broken. Next level intraday is 78.80. And then what ended up happening, right? I said that when it was around here, when it broke 80.50, and that the next level is going to be 78.80. So if we see the charts for what they are, we can become better traders, because this way we're not dreaming of trying to make millions. What we're trying to do is we're trying to make a decent living, out of this by becoming very good, consistently winning traders. And the only way to do that is by looking at the charts for what they are, but also remembering that volume is very important. That's why there are two things, the two V's, they're very critical in terms of trading. One is volume and the other one is volatility. If there's an instrument that is very volatile but there's no volume, it's hard to get in at the right price, it's hard to get out at the right price. Because if there's no volume, you're going to get stuck and you can't get out because the spread is so big, right? If the volume is very light. That's why you need volume and volatility. But if things have a lot of volatility, like for example bonds, right? The only way you can make money by trading bonds, even though there's lots of volume, there's no volatility. So you have to go, heavy. That's why only institutional players can go into bonds, and they can only make money because they're trying to make small amounts of money, but with large sums, billions, of dollars. And that's how they make, their millions, right? By slicing and dicing a bigger piece of the pie. So for us though, as retail day traders, right, we need both volume and volatility. So as prices spike up on Bitcoin or cryptos or anything that you trade, right, always remember that volume is very important. If there is no extra push, right, so this is the extra push. So once the initial move goes to the high side, right, volume has to be higher consistently for a while. So volume should be at the 2,000, 2,500 because there should be more people jumping in and buying this. If there are not, then what happens is that the market settles down, just like it did here. Every time I try to make a little push, and you can see it, 12 o'clock, right? You can see the push. Boom, a little spike in volume. 3 o'clock, right? Over here, you can see a little spike in volume. It's trying to break out. But then 8,600 stops them every single time. So you have to remember volume and volatility, right? And always remember support and resistance. So even though this is like old school, technical analysis, there's a reason why it works, because this is where people get filled. 8,600 and 78.80. So once you know the positions, you can look at the charts in a very objective way. This way you can make better and smarter decisions by having a little bit more discipline. So as always, we thank you for watching our videos. If you have any comments or questions, please write them down below. We're very good at answering all of our questions and comments. If you don't follow us on Twitter, Telegram, and TradingView, please do. We put a lot of our notes and our trades and our targets and just good information out there, all for free. So please follow us, and hope you have a good rest of the session. We'll see what happens to Bitcoin in the next couple of hours. Thank you and have a good night.